the imminent approval of Spot Bitcoin exchange-traded funds, ETFs. These ETFs have been navigating a lengthy process with the Securities and Exchange Commission, SEC, stirring immense excitement in the Bitcoin realm. Now, why the hype? The new ETFs aim to revolutionize Bitcoin investments by holding actual Bitcoins, eliminating price disparities seen in current futures ETFs. They promise lower fees, around 0.25%, and some even offer no fees for early investors, like RK and 21 shares ETF, RKB, on the first $1 billion in transactions. Back in April 2023, RK and 21 shares announced their application for a Spot Bitcoin ETF, marking a turning point. This triggered a domino effect, with major players like BlackRock, Fidelity, WisdomTree, Grayscale, Bitwise, and VanEck joining the ETF race throughout the summer and fall of 2023. As these applications unfolded, so did the excitement around Bitcoin. When BlackRock submitted its application in June, Bitcoin's price soared by 5% within a week. Imagine if you had invested $1,000 in Bitcoin in April 2023 when RK and 21 shares made their move. Turning our attention to, despite the recent approval of Spot Bitcoin exchange-traded funds, ETFs, Bitcoin's spot price has taken a dip of 9%. This unexpected move raises questions about the anticipated watershed moment for crypto with spot ETFs. Let's untangle this crypto puzzle. The narrative gets interesting when we focus on Grayscale Bitcoin Trust, GBTC, a major advocate for legalizing US spot ETFs. GBTC recently converted to an ETF itself. This move allowed backers to reclaim around $28 billion worth of Bitcoin collected by GBTC. Surprisingly, in the 4 days following Spot ETF approval, GBTC redemptions totaled over $1.6 billion. Now, the plot thickens. It appears that some investors who had been strategically buying GBTC at a discount in anticipation of its ETF conversion are now cashing out entirely instead of shifting to cheaper spot. Listen up. The recent surge in Spot Bitcoin ETFs has sparked a new wave of choices for investors. 9 new ETFs hit the market last week, and it's an ETF wave like never seen before in my career. Last Friday, Vitafi hosted the Crypto Symposium, bringing together experts from 8 Bitcoin ETFs. A massive win for the advisor community, but with any investment, there are risks. We explored what matters most to investors when choosing among Spot Bitcoin ETFs. Survey results from Vitafi revealed that investors prioritize the expertise of the firm when choosing among Spot Bitcoin ETFs, with 47% of respondents selecting it as the most critical factor. Liquidity and expense ratio followed closely, showing the careful consideration investors are putting into these choices. Now, let's talk fees. The ETF fee battle started early, with 7 ETFs offering a 0.00% fee for the first few months or until reaching asset thresholds. Even with fees reinstated later, the expense ratios are expected to align closely. Notable mentions include the Franklin Bitcoin ETF, Bitwise Bitcoin ETF, and Fidelity Wise Origin Bitwise Fund. On the liquidity front, the Grayscale Bitcoin Trust ETF, GBTC, took an early lead, uplisting into an ETF with a 1.5% fee and $26 billion in assets. Despite this, other Bitcoin ETFs collectively traded more than $2 billion on their first day. Shifting our focus to this one. The SEC's recent approval of ETP-funded Bitcoins on the registered securities market signals a significant shift. This move opens up new avenues for your investments, especially for those eyeing Bitcoins as part of their retirement strategy. As we previously thought, crypto might fade away like a historical financial frenzy. Recent events tell a different story. The SEC's approval acknowledges the reality that cryptocurrencies, especially Bitcoin, are here to stay. With Bitcoins valued at $49,000, it's evident that the financial industry must adapt to ensure safe and sound usage. Gary Gensler's attempts to regulate crypto excesses face hurdles, leaving us with a digital currency landscape that demands attention. Members now have another option beyond traditional credit union accounts, presenting both opportunities and challenges for the financial industry. The NCUA has taken steps in the right direction, allowing credit unions to enter referral relationships for electronic wallet services. Turning our attention to Coinbase, the crypto giant is at a crossroads. While it stands as crypto's flag bearer, its core business faces challenges. The exchange's revenues are stagnant, and its attempts at diversification haven't yet hit the mark. The spotlight is on Coinbase's custody plans and offshore derivatives operation to determine its fate in 2024. In a twist of fate, Coinbase's traditional stronghold, crypto exchange trading, is becoming a low-margin commodity. Even its touted services, like USDC, face challenges with declining market cap. The recent surge in custody, thanks to ETF clients, may not be the saving grace, as the fees are relatively modest compared to the total revenue. The SEC's legal battle looms large over Coinbase. If it prevails, the company's revenue could take a severe hit, and it might become an acquisition target. On a positive note, Coinbase's offshore derivatives operation holds promise. With FTX and Binance facing challenges, there's an opportunity for Coinbase to lead in this space, signaling a potential turnaround. Listen up. Chainalysis reports that over $24.2 billion found its way into illicit crypto addresses in 2023. These include wallets tied to sanctions, terrorism financing, scams, and more. Stay tuned as we unpack the details and implications. Cryptocurrencies, with their borderless nature, empower global transactions. However, this feature also opens the door to illicit activities. Chainalysis suggests that the reported figure is likely an underestimation, emphasizing the challenges of tracking and combating crypto-related crime. The breakdown reveals sanctioned entities and jurisdictions accounting for 14.9 billion of the illicit transaction volume, representing a significant 61.5% share. Notably, much of this involves crypto services under U.S. sanctions or in jurisdictions where these sanctions lack enforcement. While revenues from crypto scams and hacks dipped in 2023, ransomware and darknet markets experienced a surge. The report also highlights various illicit addresses linked to cybercrime, terrorist financing, and chilled abuse material, shedding light on the multifaceted challenges crypto faces. Shifting our focus to this one. Ripple, the third largest cryptocurrency, faces a challenging phase. Despite a significant 50% rally in mid-October, XRP has been struggling for 3 consecutive months. Now, our focus turns to the recent interview with Ripple's CEO, Brad Garlinghouse, as he sheds light on the impact of Spot Bitcoin ETFs and the future of crypto regulations. Garlinghouse emphasizes the approval of Spot BTC ETFs as a game changer, signaling validation for the entire crypto industry. He sees this as a significant step, bringing institutions and government entities like the US SEC into the crypto space. But while Ripple's CEO discusses the broader crypto landscape, XRP's struggle continues. The charts tell a story of XRP's challenges. Breaking below the ascending trend line, the price interruption suggests a potential 3% fall to the $0.54 and $42 support. Technical indicators like RSI, AO, and MACD hint at a bearish scenario. However, there's a crucial inflection point at $0.5442 that could sway the tide. On the optimistic side, a rally could ensue if XRP clears the resistance at $0.5784, targeting the psychological level of $6,000. In a highly bullish case, envision XRP climbing further to breach the $0.6500 level. Turning our attention to the percent of total supply in profit metric, a crucial indicator, is causing some concern. It hasn't prophesied a crash, but it's waving red flags that we can't afford to ignore. Sentiment, the on-chain analytics firm, unveils a red flag as all three major cryptocurrencies exceed their historical averages in the percent of total supply in profit metric. This metric tracks the percentage of each crypto's circulating supply currently in a profitable state. Now, with Bitcoin, Ethereum, and XRP in a high-risk zone, there's talk of a potential mass sell-off. Typically, when profits are on the table, investors may be tempted to sell. The current scenario, where 84% of Ethereum's supply, 83% of Bitcoin's, and 81% of XRP's are in profit, is making analysts cautious. The numbers are historically high, raising concerns of a looming sell-off if market conditions take a negative turn. While this data isn't a crystal ball for a crash, it does flash a red signal for investors. The potential for a mass sell-off looms large, especially if broader market conditions sour or negative news specific to these cryptocurrencies surfaces. On the flip side, sentiment suggests that institutional interest, boosted by ETFs, might counterbalance and push prices higher despite the elevated profit percentages. It's a complex crypto dance, and not every high profit scenario has led to significant sell-offs. The crypto market is known for its unpredictability. Listen up. XRP battling against bearish forces. The 200-day exponential moving average, EMA, proves to be a formidable opponent, acting as a key influencer in shaping XRP's price trajectory. Currently below this crucial mark, XRP faces a tough climb. Will it break free, or is there a storm ahead? Let's navigate. Ethereum, the second largest crypto, encounters its own challenges. Struggling to form a higher high, Ethereum's upward momentum is at risk. Chart analysis reveals a clash between sell orders and support levels. Is Ethereum's bullish run at a crossroads? Stay tuned as we dissect the dynamics. Amidst the market turmoil, Solana, SOL, seeks to regain upward momentum. Once a high flyer, SOL faces resistance at the crucial $100 mark. The chart tells a tale of struggle and resilience. What lies ahead for Solana, and can it overcome the barriers to resume its ascent? Let's explore. As we navigate these crypto waters, remember, the market is dynamic and challenges are part of the journey. Traders and investors are closely watching technical levels, resistance, and support. That's a wrap for today's SatoshiBuzz. Until next time, stay crypto cool, my friends.